Hey, what's going on, everybody? Welcome to another episode of the Path to Profit podcast. Join me for the first time. As I do every single week, me breaking down everything that went on in the overall market to get you ready to trade for next week. So, without further ado, it's time for the rapid review. All right, if you want to jump around, timestamps down in the description. But as always, wait until the end of the podcast to catch the 0 through 10 rating on the market so you can see where I think this market is going. But without further ado, let's get started with current state of the market. So current state of the market direction, we are still in a confirmed uptrend. In terms of distribution days, so last week we ended off distribution days with one distribution day on the NASDAQ and none on the S&P. And as you can see from the screen, we gained 2 distribution days this week on the NASDAQ, leaving us with 3. So those distribution days were gained on Tuesday and Wednesday of this week, both down on volume with the NASDAQ. And days in the trend, we are 13 days in the trend. So looking at the distribution days, you can see those on the screen, the 5th, the 11th, and the 12th, all 3. But we got a little bit of ways until we can drop any of those off, whether it be 5% above the close of the distribution day or due to time with 25 days occurring since that distribution day. So going to be some time before we drop some of those off unless we have a pretty big move on the NASDAQ. But as you can see, again, nothing on the S&P. All right, moving averages, still green on all the moving averages. Thought it was pretty interesting. Got 0.4, 0.4, and 0.4 S&P, NASDAQ, and the Dow above its 10-day moving average. Thought that was pretty interesting that they all happen to be the exact same amount above their 10-day. But other than that, healthy bounce above all the moving averages. And as you can also see, moving averages sitting in the proper order, 10 above 20, 21 above 50, 50 above the 200, which is another good sign. All right, so for the week, the S&P was up 0.76%, NASDAQ up 0.29%, and the Dow up 1.20%. And then for the year, you have the S&P up 7.77%, NASDAQ up 15.83%, and the Dow up 2.23%. So more green, mildly up week on the indexes with the Dow leading out the week. But let's jump over to Thinkorswim so we can take a look at what's going on the indexes. So we've been talking a lot about kind of being in this, last week I called it the no man's land, but this like tight pattern where we could really go either way on these indexes. We can go up, we can go down. And that being because we have this level of resistance here in the yellow. And that's what we're trying to break through to continue higher. And we've seen this cause us to get rejected and move back down, rejected and tighten up. But as of right now, I think things are definitely looking a little bit more on the positive side because the rejection we had resulted in this tightness right here. And it almost looks like a kind of cup with like a handle right here. Now, that doesn't mean that, okay, things are positive, start diving into the market. Again, ideally, we really got to get above this price level, same as last week, if we want this market to continue to have some strength higher. And if we don't, and we continue to see resistance here, there is a possibility that we could just get rejected and turn around and go back down and possibly even create new lows. So keep an eye on that. In terms of the weekly, you can see that right there. Downward trend, our attempted rally, and this kind of stalling that we're having right there. We'll look at the S&P, but the S&P really having almost the same exact action where we've kind of had this first attempt to get through that price level, rejected, pulled back down, try to get up again, and now we have this tightness. So let's see how that pans out, but is also your weekly. I think the big thing is going to be, especially it's easier to see on the NASDAQ, looking at kind of right around this 11,827.92 and the low that we got on the 6th. If we kind of pull back and break below that, we're probably going to go a little lower from here. It doesn't mean we're going to create new lows, but it just means that we're probably breaking to the downside. This is almost like a little Darvas box area. So really, really keep an eye on this Darvas box area. If we break higher, I think this is a good time to really start building some positions in your portfolio and maybe starting to get a little bit more exposure. If we start breaking to the downside, you want to start being a little quick to protect yourself because we could be falling a little further down. Other than that, I think it's just a time to really be patient and see which way we tend to break. All right, so let's jump back over to the industry groups. We look at top 10, bottom 10 weekly performers, biggest jumps and falls in the ranking, and the top 20 with the top 10 showing you some CANSLIM stocks and stocks breaking out. All right, so top 10 weekly performers, you got those up on the screen. Yeah, nothing really that's jumping out at me besides the mining metal and ores. We'll talk about that a little bit later in the top 10 industry groups, but that's a group that seems to be showing some consistent strength for sure. In terms of bottom 10 weekly performers, see those on your screen. Yeah, nothing really worth commenting on here. All right, biggest weekly rank jumps. Again, starting to see some of these NASDAQ type companies, these computer companies, computer networking, computer software medical, computer software enterprise again, showing strength and moving up through the rankings, which is a positive thing for the market. Bottom 10, nothing really to highlight here. Yeah, nothing much to add on, but there you have your biggest weekly rank falls. All right, 20 through 11 up on the screen. Like we just mentioned, starting to see more of those computer and tech companies starting to make their way into the top 20. This week, really seeing it, as you can see, computer software specialty enterprise, computer integrated service systems, computer networking, computer software database, all of those jumping into the top 20, which is definitely good to see that. And then just even looking back at some of these other groups, you also have electronic miscellaneous products, computer software design. So starting to see a lot of the software type companies making their way into the top 20. Positive sign, especially for growth stocks. All right, so let's go over to the top 10 industry groups. We'll be looking at all top 10 industry groups, and then we'll be pointing out the Campos composite stocks, which are stocks that meet those criteria on your screen, and highlighting anything that's actionable. All right, let's get started with number 10. So number 10, got that up on your screen. There you guys go. This was 19 last week, so jumping from the bottom of the top 20 into the top 10. And it's building, residential, and commercial. This group, definitely a lot of stocks. I'm just going to put them up on the screen. You can see solid movement. It's trending upwards. The RS line is like slightly down, even I would say down to flat, but this is the big thing that I wanted to show you. I mean, all of these stocks are in a base pattern, right at a pivot, breaking out some sort of a actionable stance that these stocks are in. Every single one of those. Highly suggest screenshotting this, highly suggest going through these stocks and taking a look, because there's a lot of opportunity if you are somebody that wants to purchase some stocks in the building resident and commercial. Can't talk. Worth definitely paying attention to. All right, let's go to number 9. Sorry, having some troubles with my one screen over here. All right, so number 9, we got cosmetics, personal care. This was 10. Now jump to number 9. You can kind of see this saucer type of pattern right here, as it looks to be breaking out to a 52-week high. So pretty cool to see that. We've talked about this group, the big one here, Elf Beauty. That's the big one that a lot of people have been talking about in this group. But stocks in that group, there you go. Nothing actionable though. All right. Next up, electronic semiconductor equipment, jumping up to number 8. This one though, you can see the RS line sloping down. You can see that's below its 50-day. Something interesting. So just really keep an eye on this group. Right now, not looking that healthy for sure. So, and there you have your stocks. All right, number 7, telecommunications, cable, satellite equipment, dropping from number 5 to number 7. This one also RS line kind of taking a pretty drastic slope downward, but The overall chart pattern I don't think is atrocious, but you can see the RS line definitely sloping down, and a couple stocks there. Number 5, computer hardware and peripherals. This went from 4 down to 6. RS line pretty choppy and flat. The overall trend of the price, though, is definitely still trending upwards, and we're above all of the moving averages. So somewhat healthy here. Only stock, Supermicro Computer. Stock we've actually talked about a lot on here. But that's really all we have on number 6. Number 5, leisure, travel, and booking. This was number 1 last week, dropping all the way down to number 5. Another group that's been bouncing around in the top 10 for a while now, your Airbnb group. And they have the one stock that consistently shows up, Booking.com, still sitting in that pattern. It's kind of been hovering right at that pivot point for a while now. So, number 4, computer software, education, and media. This is Spotify and Duolingo, the 2 big names that everybody talks about in this group. So you can see that on the screen there. Nothing much else to add. Number 3, and Duolingo, the only stock that meets the criteria. Number 3, so this is mining gold, silver, and gems. This is a group that has been showing tons and tons of strength, as you can see, based on just the way this chart is just kind of going right up on a pretty vertical movement to the right. RS line trending upwards. This probably looking like one of the healthiest groups in the top 10 right now, showing a lot of strength. So keep an eye on this. This is a big group too, and you'll also see you got a lot of stocks. A lot of them are extended, very much like the actual industry group pattern. But you can see those 2 names right there are actionable or in a pattern. So, but definitely a big group, definitely a lot of stocks to look through, and clearly a trend that we've been seeing week after week that continues to look positive. All right, number 2, metal production distributors. Skipping this group as we do every week. Not really worth it. Very small group. But number 1, electronic semiconductors, fabulous. All right, so this is a group that we've been talking about for a long, long time now, week after week after week. This went from 3 to number 1. It was down slightly for the week, but one of the things you can see is it just broke below its 50-day simple moving average. Not a positive sign. You'd like to maintain above that, hold above that, because that's normally a very deciding line. If you can remain above that, things tend to trend up. Once you start breaking down below it, sometimes tends to trend down. But one of the things that I noticed is we've just kind of been going sideways in terms of price action. We haven't actually broken down below these 2, what is that, 1,496.17 and the 1,501. We haven't broken below these 2 areas, so you can see just kind of moving sideways. We'll see if we can actually rebound from here and kind of continue higher. But a lot of names in here. These are the few campus composites, and Broadcom and PI are the only 2 actionable. So that's all we got on industry groups. Look, if this market is going to break out, I think it'll be a little more clear when we start to see the groups that are really, really showing strength right off the bat. I've been saying this for a while. We've seen a little bit of shifting going on with the industry groups, and it doesn't seem entirely clear. But I think it's just one of those, just keep watching every single week, keep seeing where you see stocks popping up on your watch lists, and that's going to lead you to the next big group that's going to bring you to some hopefully big gains. All right. We got the earnings. You can see those up on your screen. Earnings starting to pick up. These are basically all the earnings that are above an 80 composite. I think I picked to this week. And you can see all those on your screen. So be conscious of anything that you're looking at or anything that you own that is reporting this week. All right, so stance on the market. Again, 0 through 10 rating on the market as you see on the screen. So for this week, last week we were sitting at a 6.3. It's kind of one of those where like I keep saying, I want to be patient. I want to see what the market tells us. And because of that, we are still at 6.3. Look, here's the thing, as I try to balance this board right here. There we go. It's too soon to tell. You're going to have a lot of people that are going to be out there talking about, oh, did you listen to the news? Did you hear about this? Did you hear about China? Did you hear about the US dollar? Did you hear about the housing market? All these different things, jobs, this, that. All this economic data that everybody's been talking and spewing and going on about, and I hear it constantly around me. Look, at the end of the day, the market is going to tell us where this is going to go. You can sit and you can look for the, oh, okay, this is what's going to happen based on this economic data, and it's just not worth it. Follow the market, do your work every single week, and it will tell you where this market is going to go. Now, I think at the point we're at, it's very important to be patient because we're in a point where it could go really either way very, very easily. This market could turn around and go down very easily, or turn around and go up very easily. You have to be positioned where you can capitalize on these opportunities in both directions. If you're not somebody who shorts the market or anything like that, sitting out is a way to capitalize on it. Saving your hard-earned capital and going to live another day so that when the market does turn around, you're ready to capitalize on it is a win. And being positioned to purchase stocks, and when this market does turn around and be starting to get more heavily invested in the market, is something that you need to be positioned to do. Full disclosure right now, I don't own any stocks right now. I had a couple small positions here and there. Right now, I'm just kind of taking a seat back. I want to see what starts to happen. Nothing has really pushed me to say I have to buy this right now. And I'm just trying to be a little bit more patient because I know this is the type of market that could easily chop you up. However, I am very, very prepared to quickly pull the trigger and start diving into this market. That's where I'm at. I think it's okay if you do have some positions and they are working for you. I don't think there's anything wrong with that. But it's very, very important, I think, to just be situated to make a move in either direction, especially in the time we're in right now. So if you got any questions or any comments, drop them down below, or feel free to reach out to me. But that is all we got for this week. So if you made it this far and you're not already, definitely subscribe, turn on notifications. Like I said, we do this every week. And then got some videos that if you like this, probably like those too. So that's all I got. Stay disciplined.